All right. Hey, everybody. It's Kat here. And I am today blessed with the pleasure to talk to two wonderful guys with Vetted VA on the call today. I have Nathan Nottingham and Christopher Griffith. And hi, guys. How's it going?
Doing well. Thanks for having us, Cap. Certainly appreciate it.
Yeah. Thanks. So I just kind of wanted to start we're going to talk a little bit about the hidden strengths of a VA loan today. So your VA buyers looking to buy a house and some of the things that they can bring to the table that some of your other buyers may not be able to. Before we dive into that, though, I kind of wanted to talk about, have you guys talk about a little bit about what Vetted VA is and what you guys do for our veterans. Who wants to start?
I don't know, Nate. You want me to do this one? You want to do this one? How do you want to do it?
I love how you roll this one. We get to talk about this enough that Christopher's got roughly a 15-minute button to button. We won't do that one though.
No, so real kind of down and dirty quick. What is Vette Va? We are a training and accountability company. We teach, train, educate, work with, create immersive environment where professionals have the opportunity to sharpen a tool set that few others out there really, I think, have the same opportunity to do. So the process in and of itself creates an opportunity for veterans to be educated without being solicited, without being treated like a transaction. Yeah. We answer questions, source information, and teach veterans so that they can be the drivers behind the biggest decisions that they're making in life, right? Around what many of them refer to as the American dream, right? Or a dream home, like some of the things that they serve for. Yeah. And we hold it all accountable with data analytics, right? So yeah, I think that's pretty the fastest. I shouldn't do too much more, right, Nick? Like just
So working with veterans, helping them be educated, working with people who are dealing with veterans day to day, giving them some kind of education and tools or vetting them to make sure that they are, helping veterans in the right way.
Yeah, that's fair. And I think to give some context to it, vetted isn't a statement of past tense. It's a statement of certainty because of an active process to test veracity or truth or reliance, right? It's an inspect, don't expect kind of a thing. It's a process that everyone that's a part of what we do professionally submits to willingly. Like that's the big thing to point out is they all want to be better. We all want to be better. But how do you get better? Data should inform how we can be better, and the process should be challenging along the way. So kind of follow that agenda.
Yeah, I love it. I've looked through some of your guys' content and, and I've heard from other loan officers who have used Vetted VA and, the training and, some of the things that you guys do to make sure that people are educated, that you're not putting veterans in a place where they're getting with loan officers who don't know what they're, don't know what they're selling or, that's just, it's an awesome service.
We have a lot of loan officers. We have a lot of different types of housing industry professionals, and that's something significant to point out. We have many real estate agents, and the real estate agents that we have, their level of knowledge, not only on the real estate side of the transaction now, but the full understanding of the capability of the veteran with a VA loan and how many of those things that direct what loan officers can and can't do also is the source of information that direct what they can and can't do. So it's a really well-rounded professional, I think, that we build relationships with and cultivate and help to grow around the different things they're pursuing, right? Everyone wants to be an expert, but what does that even look like? And can you say it with a straight face at any point? Like, I don't know, I'm still learning things. And so are most of the really good professionals we see out there.
Yeah, I agree. I mean, the guidelines are out there. You can read them front to back, but do you understand them? Do you actually understand how they apply?
Well, they change constantly. Like it's not just as simple as remembering like 1 through 200,000, whatever, right? It's stuff that changes. It's stuff that has more than one simple source. Maybe it isn't a VA issue or thing, but it's a Ginnie Mae issue instead, right? It's a securitization issue, right? Or maybe it's a circular or a state or something along those lines, right? So there are lots of sources that determine what can and can't be done the root being the VA 26-7 handbook, right?
Mhm.
But there are other things that dictate what the market's going to look like and what it's going to be able to accomplish for the veteran, right? The goal is to keep
Mhm.
it all focused on the veteran's perspective, what they see, what they encounter, and what it means to them.
Mhm. Yeah, for sure. Well, that's a great introduction there, Chris. And so kind of going into that a little bit more, talking, we right now market's super hot. It's in some most markets it's very hot, and we got a lot of buyers out there, especially a lot of veterans. We're seeing some challenges out there in the market. I found, at least in our market, I'm in Oregon, where people will like make stipulations where they don't want to accept a loan that's VA. Maybe they're worried about what's going to happen with the appraisal. Some of those like kind of misunderstandings about how a VA loan works and the requirements. So I
Sure.
want
And
to into that a
for the
little bit.
record, I think that's a very reasonable. I think it's
Mhm.
fine to be skeptical. Like I worked in counterintel for the Marine Corps, and I have 3 daughters. None of y'all are more skeptical than me. Okay, as a vet, I tested these things out because also as a mortgage person or person in the industry, I wanted to make sure I was using the most efficient debt product or mortgage product out there, right? So I challenge these things and continually challenge my well-held beliefs more than most of the people out there because I have multiple perspectives that inform it, right?
Yeah.
But I think it's important to say and note before we get into this conversation, if you're a person out there that disagrees with some of these opinions, or you think of a circumstance or two where it's like, well, but it doesn't work here, nothing's ever one size fits all, y'all. Okay.
Right.
There are hundreds, if not thousands, of different circumstances out there where better or best is a very much an opinion based thing. And it has to do with certain perspectives that the other side doesn't see either. So
Right.
understand that our goal isn't to convince you what's best. You get to decide that, and you're going to tell people that all on your own. But what we want to talk about is what categorically informs in your mind best or good or great, right? And it's not about good or bad company or these types of things. It's
Mhm.
about what the consumer sees, where do they get the biggest opportunity with the most access and everything else, and what categorically informs that, and how do we look at that? If there's a data set that you could look at that would
Yep.
make you challenge your thought, what would that look like? So
Yeah.
there are many different sources out there. We have something that we'll refer to here in a minute. Nathan loves his stuff and he's great at it. He understands the tables better than I do anyway, but at least manipulate. I'm not that guy, right? Anyway, but the goal is to show you from a couple different angles the truth about the quality that exists in the VA offer and in the veteran consumer, and the flexibility and the efficiency and the staying power, right? A lot of people know that it's very important for the VA to get veterans into housing, but they
Right.
don't understand how hard they work to keep veterans in the housing. That's one of their biggest missions, and they've done it well and have done it well, longer and better, I think, than any of the other products and
Mhm.
programs out there. And I think the future is going to continue to show that. So a couple different sources of information. We have things from HMDA data review that we conducted with a third-party data analytics company, Polygon
Yep.
Research, that we work with. From 2020 HMDA data, we have 2021's getting ready to roll out updates in all of these things categorically. And then we
Mhm.
have some other statements that we can weigh and use, even though we don't have a source of like time frame of the information, some other things, but from John Bell himself, the deputy director of the VA loan guarantee, who again, they do a phenomenal job, but him speaking to NAR about some of the circumstantial things about veterans
Mhm.
about a month ago. It just doesn't give us a lot of
Yeah.
time frame. We can't reference certain specific time frames around the data, but yeah, so let's go into some of those things. What are some of the biggest things that you think, Kat, that cause agents or professionals or veterans even, because I run into that, to go,
Mhm.
well, I'm not so sure. I don't know. I'm not actually sure if this is the
Yeah.
best.
Yeah, I would say like the most common one I have is they go, well, they're not committed to the transaction. And yes, they have their earnest money, but the down payment that they have is nothing. So
First of all, let me
I'm
tell you,
curious
I'll
why that
go
even
first.
matters. Maybe you can kind of
Yeah.
go talk about that.
Your concern is without
Mhm.
money or value into this thing, somehow their offer has less merit, right?
Yeah.
Like that's the root statement, right? Not having to put money down isn't inherently uh, depictive of risk or weakness. And if you would claim that it is, you'd have to show it through default rate, right? Which you
Right.
can't because VA loans have the lowest default rate, right? Or some other aspect of poor development of the individual veteran through home ownership. You can't. They develop assets really well. And then further, you'd have to
Mhm.
show that all veterans only use the VA loan because they can't put money down. They can. Veterans, John Bell quoted, veterans on average have about 40K in assets. They put down 25% of the time they put money down. And on average, he said that was about 54 grand in down payment. So veterans do in fact put money down with VA loans. They have the assets. It's just they have the option of not having to.
Right.
You don't understand exactly the value of it. It's significant.
Would you rather have somebody buy a house that says, hey, I'm going to put all the cash that I have to qualify to put 20% down on this house? Or would you rather have them utilize a vehicle, a lending vehicle that says you don't have to, right? We're actually going to guarantee to the lender, the VA backs that loan and says, if they default, we're going to pay you up to 25%. And then that buyer actually holds onto that cash, like me, who just bought a house last summer and now has to dig under my house to replace part of the plumbing that has broken, right? I'm looking at a $5,000 charge that I have to hop in here and fix. Would you rather have cash assets held so they can fix and hold and maintain and improve the property, or put it all in the property because it's a stronger offer? The other part that falls through with that statement is that cash in somehow means that they're going to close more efficiently, or that the close rate will actually be higher. 2021 HMDA data, I'm looking at it right now, from application to denial, the VA has the lowest rate of denial from application to closing. They actually close, and in the numbers, there were 591,000 applications last year reported on HMDA data, and 38,000 were denied. That's 6.6% compared to conventional 9.6%. Were the numbers bigger? Absolutely. But the percentage is higher of denials in conventional loans. You get more originations to close in a VA loan because they have to qualify ahead of even getting through the application process.
Yeah.
You're more secured if you have a VA loan show up in an offer with a VA backing that's been pre-approved. Why would you not just flip over backwards excited about that? Because now your chances of closing this on time, efficiently, and effectively have much more, they've increased dramatically.
Yeah, it's statistically better. Like, not just like, well, I have a feeling, but statistically, it is a better chance that loan is going to go through and be approved than a regular loan.
Yep.
Okay.
Well, some of the data on, I think it's ASCC data, is that right, Nate? On the Y data behind veterans of polled and random, and it's a certain size of audience of closings, right? When asked why they chose the VA loan, do you know what their answer is most commonly? Number one to say what their most one common answer was? Better rate.
Yeah, it's true. The rates are better.
Because from a financial standpoint, immeasurable, it was better. And there are arguments out there people think on funding fee, which is not a very great argument, or other items that it makes it somehow weaker from a debt instrument aspect. But again, when you dig into some of those details, and that might be a little bit too cumbersome or boring for this thing, but when you dig into some of those details, it's not true either, right? The experience of total of rate provided and the net of lender credits and costs, right? You can still show a very solid argument on why the VA loan is, in short, medium, and long term, a better product all in all to use.
Yeah.
Well, let me just lay out there to back that up. So in 2020 HMDA data, looking at this chart based on what was pulled down, the median interest rate in 2020 for conventional with 20% down was 3.25% purchases. We're only talking purchases. We're not talking refis or EARLs or anything. The VA guaranteed median interest rate was 3% with a combined loan to value median CLTV of 100%. So they were utilizing the 100%, getting a quarter better in the interest rates. So the affordability structure is still there. The closing costs were at a margin lower. And then when you add in the funding fee, yes, your funding fee is included in that closing cost number, but that's added to the loan amount over time. When they remove that, the actual median rate spread was 0.07% better than any other loan product out there. It was the only one that competed on a baseline as a better interest rate, statistically than a more competitive payment structure, while maintaining more cash assets for reinvestments and payoff of residual income, all the things that it takes to run your day-to-day life.
Yeah. And I know like one of the first things I do when I'm talking to a borrower and we're going through loan types, the very first thing is, are you a veteran? We want to find out first if that's an option, because that is, for a lender, like one of the easiest options to get done, and just super awesome to be able to have access to those programs. Like you said, lower interest rate, lower payment for the borrower, easier to get them into a property. So it has all of the benefits. And if I can get one of those, it's awesome.
Mm-hmm.
Yeah. So another one I have that I've heard from real estate agents is, well, I'm concerned that, this house is, maybe 20 years old, and, we don't get an appraisal waiver, and, we have to do an appraisal. And I've heard, government loans, what if there's a problem, and, what are the rules? I hear they're more strict on government loans versus a conventional. So that's kind of a myth, I think. What do you have to say about that?
I think minimum property requirements are something that impact every mortgage type that I know of. Even commercial, even private lenders, hard money lenders have minimum property requirements. Like, right, everything has those types of standards.
Yeah.
How they exist and why they exist and what the workarounds when they're encountered are, I think, are just as flexible and variable too. So
Yeah.
as a general rule of thumb, do government loans have some more minimum property requirements than some conventional loans? Yes, but are they significant? Not really. There are some, and you'll find some variance there, and everything's always to some degree arguable. But at the same time, what are those minimum property requirements that are drastically the same? Well, health and safety issues. That's nearly always
Right.
the item that's going to cause a problem, regardless of the loan type. And most of them encounter the same standards around local code and those types of items that are enforceable, right? Because that protects the asset and the instruments that insure it against liability and risk. So
Yeah.
it's a very significant thing to point out.
So
Oh, that's hilarious. No worries.
the work from home, guys, it's real.
Yeah. No, I've got the same issue here. Mine's sleeping under me right now, which will keep him quiet. So, but the minimum property requirements you can run into out here that are most commonly problematic, that are cited from people in the industry. It's like, well, there was chipping paint. Like, man, you can literally scrape that stuff off, and it doesn't even have to match. It's just a water intrusion thing. And so why do they have this standard? Well, one of the biggest cost surprises that veterans encounter later after the fact, I think, are some of the issues caused by water intrusion or water problems under a slab or sewer. Like certain things that, especially with water intrusion, that it's not very difficult at all to correct. I bought personally a short cell in Colorado with woodpecker holes in it. I had to do a lot of little things in order to get it closed, but it was awesome. And I'm glad they gave me the opportunity to get it done, because the loan was plenty flexible too. There are even financing mechanisms with repair escrows and renovation products that you can use in those veins as well. And they're incredibly efficient. It gives the veteran ultimately the most flexibility and the most cost-effective choice when they have that opportunity. So as far as Nate, what other items do you hear them talking about?
Well, that's just it. It's like I would reference back to the VA Lender Handbook 26-7, Chapter 12, minimum property requirements, right? Just take a look at the list. And here's the problem I have with that statement, Kat. Whenever somebody says that, I want to look at the agent who's putting that one up there, or the lender who says this is the issue, and say, then why are you selling this as a primary residence if you know it's not going to hit those marks?
Right.
Because what's happening is the VA is saying, we expect the property to be at minimum this.
It should be safe,
because
safe, sound, and pass at a basic level that the home is safe for someone to live in. Why would you be selling a house that can't meet a minimum standard for living?
They're going to have minimum, and we sell real estate, all types of real estate. We have to. That is actually cool, because that means there's supply out there. However, if you're dealing with FHA, if you're dealing with conventional, and you're dealing with VA, you're going to have to pass certain appraisal requirements. The VA, one of the reasons that you have the lowest foreclosure rate out there and lowest denial is because the property is insurable. It's backable. The VA has said, hey, it has all these things, therefore it will hold its value even while somebody's living in it, and then they own it, they take care of it. We reference this a lot in the Vette Va group. So we've got a private Facebook group, and that's where a lot of the veterans come in there. There's no cussing, there's no solicitation. They get to ask every question they have. And a lot of times we deal with the questions which are Why does a VA want so many things done on the property? Why handrails? Why no chipping paint? Why does the water have to be pushed away from the foundation? Why can't there be a bush touching the siding, right? And
Yeah.
it's all about, because the future of this property, when you living in it, if you know these things need to be done, if they're done when you buy the property and you maintain, at minimum, you maintain what it is, you have a sound, safe, and secure piece of property that will hold value and be something that another veteran can buy in the future, or anybody else, frankly.
Right.
You have the ability to sell it without taking a wash and a loss on it, and the investor is actually protected as well. So I always have a problem when somebody brings this up. I'm like, well, if you know those things are an issue, have you prepared the seller to fix them ahead of time? Because if you do, really, it's a non-starter conversation. Like, okay, we know this is an issue. We're already working on fixing it, or wait until we have the offer, and then we're going to take care of it out of escrow. Okay,
Yeah.
great. Let's get it fixed.
Yeah. Yeah, I agree, and like you said, it's the common things, and it's really about education. Educating the real estate agents, kind of, like some of the myths, I guess, they're hearing versus the truth. Educating buyers and lenders about, what the differences are, and yeah, 100%.
I would tell anybody who wants a good, like, oh, I didn't know this would be something to even consider. Check out chapter 12 of the handbook, because section 10 is lava flow hazard area.
Hmm.
So if you're concerned about lava flow hazard area, which I have been to Kona and I love the Hawaii island, right? Like the main island. I know there's a
Yeah,
lava flow hazard area there. I wouldn't want to buy a house there either. I'd want to know ahead of time. So it's good to know.
kind of important. Yeah,
I think the best way to encounter difficulties around minimum property requirements and how you can get around them, or if they're an issue, or how likely they are to come up. Very simply, if you're on Facebook, join our Facebook group, Vetted VA for Professionals Only. It's a place, same rules, no cussing, no solicitation, but literally anyone in there can ask a question. And the moderators that spend all the time educating and being educated with us answer, and we have informed discussions peer to peer that's productive, and explains the process and the potential issues around any concerns that are out there. So you don't have to be skeptical or worried in general. You can be understanding specifically, which I think should always be the goal. Like, don't be worried, be informed, and make a better long-term decision, because most of the things really aren't difficult at all, and not nearly as many come up as you might think. So
yeah.
for what it's worth, I mean, we have a bunch of people in there. It's a very productive kind of location for questions.
Yeah, I'm on that group, and there's a lot of really educated answers and questions out there, people who just don't know. And I really enjoy the conversation. And I have just, by being a member, just watching some of the conversation, have learned a lot just from experience. You can read the handbook all you want, but a lot of the other things come from scenarios that happen, and then people can tell you how to solve them. So it's great. Cool.
I think it's like most things in learning, right? You can learn it from the theory, you can learn it from the book, you can learn it from all of these things, but ultimately immersion is always going to be your best place to move for a full understanding, right? And a sharpening of the tool. And so we have kind of an immersive environment, because how frequent those types of specific channel VA, right, questions come up, and how they get solved and informed from different perspectives, right?
Yeah. Yeah. In the link and on this, this will be posted on YouTube and a couple other channels. I'll make sure to include a link and everything to the group, so our listeners and viewers can go on and join that if they're in the industry.
Yep.
So I just had one more myth that I have heard from real estate agents that I kind of wanted to address, and that's that VA loans take longer. They're more complicated to close. I don't believe that's true. I was wondering, do you guys have any data on, close times for VA loans versus conventional, or just your own personal experiences that you guys could share?
Most times there's something a little bit more difficult to track because of how companies report to them, what exists out there as far as like a national kind of tracking of that data kind of as well.
Mhm.
And like there's certain things it's not necessarily anecdotal. They're based off of data from our internal system, our VTB tracking. But I
Mhm.
can tell you our experience from a personal and from a professional experience is I wouldn't want to argue either way. Just very honestly, I think that very much it's nearly the same experience, even though in certain places one might be a little faster than others. And I think that
Right.
as often as I would say One's better than the other, it probably wouldn't be the case. I would say generally VA and conventional loans are probably the fastest performing. I think that VA in a lot of situations, appraisals are a great example, right? In some markets, VA appraisals may be an issue because they're very remote and there's no one set up there yet, which you can get impact to. That's not difficult at all. But in other markets, the driver around the 10-day demand of delivery of the appraisal made it much quicker and more responsive than the other appraisal management companies were able to be, even with conventional lending. One of the difficulties on what does the data say behind it is, well, I think the VA does a great job, such a great job instituting the best loan program out there that they don't have time to report on everything. So they're talking about certain things, but we'd love to see some data on, or them speak to some of the data on how well the appraisals are doing, kind of in an open format to inform the industry and show, because from what we're seeing, the appraisals are, there's not a value struggle. I think John Bell was quoted somewhere, and I haven't seen the source of this one, but saying roughly 92% of the time they came in at value, I think, for conventional, and then 91.5% of the time for VA. So a negligible difference whatsoever. The only thing I'll say with that is with the ROV process, or reconsideration of value.
Yeah, the Tidewater process, or
there's no other loan type out there that'll do this, not even conventional loans. If you find a local securitized, like someone that services a portfolio, they'll maybe be flexible on value. But the reconsideration of value will allow the VA to consider the property, even if it doesn't have sold homes, right? If there are other things indicative of increasing value or understanding from the veteran angle, ROV can bring in value for you like no other appraisal type can. So they can actually adjust that up based off of some different considerations there. And so I think that all in all, to argue from a speed standpoint, I don't think that I wouldn't be comfortable taking the pros on either one right now, to tell you the truth. I think that if I'd had to take either, I would argue that VA loans in the hands of the right person and companies are faster. But at the same time, there are circumstances with some conventional loans and some products, depending on how you set up and everything else, that can go incredibly quick. The reality,
and that's the takeaway is who the people are that are handling the file. Sorry, Christopher, I didn't mean to cut you off there.
I was just going to say, the reality is you see sub 14 days on both, like quick stuff. Like it happens consistently. We see it. We hear our professionals talking about it, sharing the wins, and the veterans talking about it too. So I think it's exciting that they can't show anything else. They if anyone wants to come out and say anything negative about it, you're not gonna be able to show any data that says anything negative about it. We've looked.
And that's where I think the counter comes to that question is they take longer to close. Okay, well, what's your experience with them? Because if you're inexperienced with the loan product, or you have an inexperienced team working on it, then they're not preparing the file ahead of time like they should. And if I said, do you still run into the same issues with FHA or conventional taking longer to close? The answer is always, well, I've had some files, but if you look statistically speaking, maybe it's only a few files out of many in a conventional or FHA, where it's like, well, I only dealt with 4 VA loans and 2 of them took longer to close. Okay, well, you're statistically incorrect, because you're saying from my experience they're longer to close. Well, let us help you, train you on preparing the file, preparing the borrower, preparing the seller. Like, here's what we need ahead of time. A really solid VA package is basically pre-compiled with all the data, the COE, the verification of income, the residual income packet. Like, all of it's really well organized and structured. So when it comes down to an appraisal issue, you mentioned the Tidewater, Christopher meant ROV. You have 2 distinct opportunities in the VA appraisal to counter an appraisal that you don't think is correct. Like, the first is Tidewater. The appraiser has to contact you and say, hey, we're not going to come into value at the value of this contract. Now the professionals get together and go, okay, well, let's find all the comps that we think prove the value and give those to the appraiser before they issue finding of value, notice of value, NOV. Then if it still comes back under, that veteran, active duty member, the VA eligible borrower can write a letter, make contact with the RLC on their own and say, look, this is important to us. We believe it's worth this, which is why we made the offer. We think you should give us this value, please. Right?
Yes.
And more often than not, the RLC is like, okay, that makes a lot more sense. We'll help you out. Like, they may not always come up to value, but they could make enough marginal change where the seller goes, all right, we see it, we get it, we're going to take it and move forward. I mean,
That doesn't
So
exist on any other loan
no.
program.
So does that add, if you have to do that, does that add a couple days? Probably. But did you lose the deal? No.
Exactly.
And if maybe our pricing was a little bit off and we could have renegotiated for a better price where that wasn't going to be an issue in the future, okay. But that's not a VA loan problem. That's actually a VA loan strength.
Yeah. And I like what you talked about, Nathan, about making sure the loan file is set up correctly. It may not be that the VA loans are having issues closing. It may be that the people are not properly trained. You need to make sure that
And
you're
that's
with the professional who, like you said, either is part of vetted VA or, knows the process. They're not stumbling through it going, shoot, I've never done a VA loan before. I don't know what I need.
Right.
And, and then the veteran's like, you got this? You're like, yeah.
Well, the reality is you always hear the professional, and please, if you're out there and you don't do a lot of VA loans or you don't work with a lot of veterans as an agent or as an underwriter, whatever, if you don't do a lot of them or you do some of them and your statement of disbelief around the product capability or performance capability of it starts with, in my experience, or, like personally, consider that in my experience is probably indicative of the real issue. Like,
they don't have experience.
It is a complex loan, and the reason why is because it is very tolerant of difference and difficulty and other things that are faced. Like, it's very flexible, so you have to be able to know how to use it. And we find that education and understanding about the product and its capability and how to work around some of the finer, more flexible points, that usually separates the experience of where is it showing its strength versus who's dragging down the average.
Exactly. Where's the problem? The problem isn't with the VA loan itself.
Pick it up. Like, in my experience, it's like, bingo. What were you saying? Sorry. Keep going. Be very humble, guys and gals. Like,
ask for help. Like, if you need help, there's resources out there. If you don't know and you want to do the deal, like you said, there's the Facebook group. There are tons of options to say, look, I'm struggling. I've got this buyer who's VA qualified and I don't know what I'm doing. Talk to professionals. And there's so many people out there that are willing to help on all sides because veterans are important and they want to make sure that they get into the home that are willing to help, So put your pride aside and ask for help if you don't know what you're doing.
Yeah, but veterans are important, like all veterans, but they're not importanter than anyone else. The reality is it's important for you to understand people's experiences, what their opportunities are, especially if you're a professional expected to guide them through the decisions during those huge opportunistic times, right? So understand the full capacity of what they're capable of doing, see from their perspective, and make sure the things that you know how to do, help them solve their problems, right? The VA loan is incredibly flexible. You can do just about anything with it. I'm telling you, believe it, put it in the back of your mind, it's true.
Yeah, for sure. For sure. Well, I like I said, I'm going to post a link to the Vetted VA Facebook group. I also will post a link to the Debunking VA Myths document that's on Vetted VA that kind of lists some of these myths and, kind of the power of a VA loan. So our viewers can look at more of this information and look at some of the data points you guys referenced today. So that's awesome. That's what I wanted to cover today. I really appreciate you guys joining me today on this call and going through all of this information with me.
Absolutely. And I would just say if anybody watching wants more information or thinks they want some deeper training and opportunity, just to reach out to us, info@vettedva.com. Let us know that you'd be interested in maybe some more training and vetting, the whole process we go through. We're pretty much an open book when it comes to that and what we're doing. And we just want to continue training professionals who have a heart to serve and a willingness to continue learning. I think an expert is somebody who understands they don't know everything and there's still more to know. And that means they're just an expert of understanding. They want to learn.
Agreed. Well, again, thank you, Nathan. Thank you, Christopher, for joining me today. And to our viewers, thanks for watching. Submit any questions that you have down below, or like you said, email Vetted VA. Thanks, guys.
Thanks so much, Kat. Yep.
Thank y'all.